Hello, this is post session review. Today was 24th of May 2023 and today was expiry day. Starting with the market environment, uh, with the hindsight, how would you define the market environment? So on daily time frame, the market environment is sideways. The Nifty bank is stuck in a range. Yesterday it was an indecision candle and today it opened gap down. On Nifty, it was also a sideways, it is stuck in a sideways range on daily time frame, and today it opened near the demand zone as it was the case in Bank Nifty. So this is the gap down opening. It was not actually a gap down, it was in the range only. And this in Nifty, same, it was near the range. This was yesterday's price action, as you can see, negative bias. How successful were you in identifying the market environment during the trading session? I was successful uh, during when the market was opening, but I fumbled when the market, as in when it progressed, I lost track and I was uh, not able to determine it carefully. What signals were present to indicate this market environment? What key pattern features were present, and how could they have been used to identify the market trend and bias? So market trend and bias was very crucial today because if you see, these are all the demand zones in a sideways environment, and the Bank Nifty opened with a negative bias. It opened yesterday. There was negative trend on trading time frame, uh, and on daily time frame it was sideways. So the price was moving from positive to a negative side, the supply side. But this was the demand zone, and there were multiple demand zones, and this was indicative of the fact that there will be very choppy action today, and it was better to wait for the very, very best of the best setups which the market has to offer. Otherwise, there was clear SL, your SL will be taken out today. Moving to next section, how would you trade the open? Uh, Today it was better not to trade the open because in Bank Nifty it was flat opening, which means no bias. The price action was negative, which means negative bias, but the location was positive, which means it was a very strong demand zones everywhere. In every 50 to 100 points, there was strong demand zone. Only below 350, there would have been a clearer, smoother way to trade, but all these were clear demand zones. Similar, it was absolutely same with Nifty as well. This was an initial demand zone, and the price the f- opened flat, which means there was no bias at the open. The opening price was nothing. The price action was negative. You see, lower highs getting formed, and the location, it's all demand zone. It's demand zone. It's taking support over here. It's demand zone. It's demand zone. It's demand zone. Although not that strong, but still quite strong demand zone. So it was better to stay off the open. It was only better to trade the open above 325 or below 200 because all this was demand zone. Coming to the trades, this was my first trade, which was in Bank Nifty. Uh, with the benefit of hindsight, was your trade based on valid setup for the market environment? Absolutely not. It was not favorable for the market environment. What was favorable in this market environment was to sit out, avoid shorts at any cost because of the location, and reduce the quantity. And if I wanted to go long, I should have waited for the break of structure, that is lower high and lower lows, and this was broken over here. Then again, this was hunted, But again, this was so I could have traded over. This was the only trading opportunity the market had to offer today. Rest everything was just traps, at least in Bank Nifty. Uh, uh, what signals are present that you should have led you to avoid the trade? Support not broken, because the demand zone, this was the support demand zone and it was not broken. Stop locate and say, was the initial stop location appropriate? Was it in accordance with my trading plan? With the benefit of hindsight, should stop have been placed without signals, if any, did the market provide to identify that location? So as I said, this was a very, very bad situation to trade in. Uh, this was a very bad stop also. First of all, I should not have taken this trade. And if I wanted to take this trade, then I could have traded near the supply zones. That's how you trade in these volatile environment. You enter where you think that the trend will change, and that would give you decent profits. The basic sideways market structure theory. So there's not much to discuss because this was a very wrong trade. The market environment was not supportive of the fact, so we're not going further into it. Trade 2 was in Nifty. So this was a better trade, not the best trade, but a better trade. So with the benefit of hindsight, was the trade based on valid setup for the market environment? This was kind of better trading setup because this is also not that good. But if you see, this was the major supply zone. It's trading now below it, and these were little minor supply zones. Next major supply zone was over here, 18215. So this formation happened below previous day low, and it consolidated and also formed a small trend line, and it consolidated over this supply zone, this resistance. And when it was a valid trade, the stop loss could have easily been above where the price rejection was shown again and again, maybe a little bit even further up to avoid stop loss getting hunted, and the target could have easily been the next major supply zone, which was nearby achievable, which was 215. So review the signal that led you to identify the trading opportunity. Already told you, negative price action, price below major demand zone, consolidation, and small trend line. What was the ideal entry point? My entry was ideal, and SL was also ideal in this case. And what signals, if any, did the market provide which could have led to an improved entry? I think it was ideal. Initial stop location was appropriate, where the benefits of hindsight should have should the stop have been placed? What signals did the market provide to identify the so yeah, after this 11:15 candle, my SL should have come down to my uh, to make me break even in this trade. No matter what, then I should not have taken any loss. In fact, I should have booked some 25% of the quantity near this resistance, and then I could have waited for 215. Stop location, I already told you it was valid. What was the optimal exit location? Already told you exit plan as well. Some 25% of the quantity here, and rest at the target. And the SL could have been placed at the break even after this huge candle was made. Quantity in this trade also should have been normal only, because this is also I mean because it's also near the demand zones. Instead, like if the normal trading quantity is 50, uh, and for A plus setups it's 100, then this could have used around 50 only, not more than that. I also committed a huge mistake. This trade I was not able to fully ride it. There were mistakes of quantity as well, so I will be discussing that in the later half. Now the third trade, which was again in in Nifty as well. So with the benefit of hindsight, was your trade based on valid setup for the market environment? I think yes. This was trade was based on valid setup because this was a major support. I mean demand zone from where the market just shot up. So this was it was also near a round number, which is 214.15 around. So yes, I was confident of the fact that this trade might work. If Review the signals that led you to the identify the trade opportunity. The best signal was this hammer candle which was formed. It was all negative price action, and this was major support after this major resistance. So price was moving from that place to this place, consolidated, broke down, and a hammer was formed. So the SL was also very small, few pips below the hammer. So entry could have been taken as soon as there was a retracement, because confirmation was needed in such market environment, because the price action is still negative. And so the quantity could have been less. Like if you want to trade if you trade normal quantity is 50, then in this case the quantity should have been only around 25. What was the ideal entry point? The entry point was not ideal in my case, because I should have waited for retracement in this kind of market environment to further shorten my stop loss. What was the initial stop location? I think yes, it was appropriate. With the benefit of hindsight, should the stop have where should the stop have been placed? So I think it's right. The stop should have been placed over here. To what signals, if any, did the market provide to move the stop to break even or beyond? Uh, I think my stop once this candle 1150 candle has was made, I should have moved my stop to break even, and actually uh, yeah, what was the optimal exit locations in order to minimize risk when wrong and maximize gain when right? So my exit was again fucked up. I exited way too early. I should have waited to exit near this place 251, because this is the place where there was initial resistance, and this was the place where the consolidation happened, and this was the place from where the fall happened, the supply came in. So I think this was the desired location to exit, but I exited way too early. Why I exited way too early is because I was so scared after trading such huge quantities over here and doing stupid trades in Bank Nifty. I was already in loss, and this trade gave me some good profits. Um, so this and That's why I was psychologically wrecked. Coming to last set of trades, these were based on the same logic, but they were again and again taken, and again SL was hit. This was very frustrating. So this was based on my previous experience that the price is not willing to go down, and the way the price had shot up over here, uh, uh, I was of the opinion that this will be respected. 43,500 will be respected, and the day low won't be broken. So I took an entry around 534 when the opportunity arose. Market gave me an opportunity to go take an entry. But what the market did was it again went and broke the day low, which was I was not expecting the day low to be broken, and I was in with very huge quantity. This was only one entry. I was continuously adding to this because I was of the opinion that the day low will be held, but it didn't happen. This was very crushing for me because I took a huge loss, And then after this, when it made this candle, I again took an entry, expecting that this was just stop loss hunting, and that this was just stop loss being getting hunted. So, and then the volatility on the options price was so much that I got this entry at the price of, if I would have entered over here. So sorry, the SL which I hit over here was the same entry I got like on the price where the price was over here, and exit I got below what uh, the price is over the previous SL was taken out. So this was huge SL, and I was in with very big quantities, extremely big quantities. Eventually the market did go up. I was expecting the market to shoot up like this, but what can we do? I just After this, I just stopped trading, and because I was not in the right mental state. This could have helped me gain all my profits back, but can't help it. So uh, this was very major setback to me. There are so many learnings to do. The few learnings, very so many mistakes are there. So coming on to the mistakes section. So there are some mistakes which I am continuously committing, and I think that this is because of I am on a time. I'm running out of time. I'm planning to get rich and before my birthday, which is on 14th June. So these are the mistakes which I'm committing again and again. Even though I'm able to understand the market and how it functions, I'm committing these mistakes. Quantity mismanagement. I am punching huge quantities without having good experience of a confident trade taking. Not even one good trade like this huge trade, not even one I have taken in my life with full conscience that I took the trade over here or around over here and rode it till the very end. Not even one single trade I have taken in my entire life. What I do is I'm only able to survive this long because of my discipline of sitting in front of a laptop of my trading terminal, and I do stupid shit all day long. And uh, when these huge opportunities arise because of the grace of God and so many days of having the experience, now that I know how price action works, how when will these huge trades work, and what are the probabilities of them going to this exact place. So I know everything about it, but not even once I have traded like that. So when huge moves occur, I enter huge quantity and exit quickly as soon as my losses are covered or some small profit is made with respect to the loss. I need to be very disciplined and need a planned way of trading. I need to follow a plan that yes, normal, this is my risk profile I need to define in the morning. I take that quantity and comfortably sit till the stop loss, and that stop loss should be very valid stop loss, not because I'm scared I want to exit so I'm exiting. No, that stop loss should be valid stop loss with the quantities I'm comfortable trading. And no, 25 one lot will not do. That is also, I need to stop loving money as much as I do. uh, this is very important for me. Market provides opportunities every day, and if my risk profile is breached for the day, and I think it's quite good risk profile, 3000 is not less. I mean, you can easily take two to one two lots easily, and 3000 won't be breached because two lots you are taking like 1500 rupee loss per lot, which is huge. 1500 is more than around 20, 30, 35 points loss. I think this is more than enough for any trade to you need to trade. So this is I think I think I can do better, and I need to be disciplined and take at least 10 good trades where I ride it till the end, and I take it with full conscience. And then I'll plan to increase my quantity. Otherwise, my quantity should be limited, not at all 500 quantities or 250 quantities in Bank Nifty. What I'm doing, it's not at all. I won't be able to sit in the trade. Like here, I wasn't able to sit in this trade. It was very uncomfortable. Although my quantity was still less, but see what I did after this. Over here, I started entering huge quantities, 150 quantity. This was 75, 150 quantity, something like that. Over here, I could have made such good money with normal 150 or 200 quantities. I entered 500 quantities. As soon as I entered, I couldn't wait to get out, and I just got out capturing 5 6 points, which is like nuts. It's so embarrassing to capture 5 or 6 points waiting all day long for this thing. Nobody wants to capture this, I guess. I mean, why? So yes, I need to be more disciplined. I need to be a better trader, and then I'll go on increasing the quantity. And I think I will be able to do that. If I'm not able to do that in real market, I'll do that while practicing, while trading on broker and back testing. But I need to do that. I need to get in those repetitions again and again.